you're a wealth of knowledge. You're invited to a lot of these Benzinga events as a keynote speaker. As I said before, co-founding of the Polaris Equity Group, which is based at Newport Beach. You've really become one of the great thought leaders within the space. There's a lot of people learning more and more about the information that you're sharing. We've had you on podcasts before, and you've had some insightful information about how a lot of investors need to kind of reset their expectations related to this industry. So as we sit here and have more conversations with you and you kind of guide us in this direction, you talked even about reintroducing the Cole memo and about how safe banking needs to be maybe pushed to the side. But do you care to elaborate on that, what you mean by that, so that way investors have a more calculated decision when it comes to understanding what the landscape is when investing in the space?
Sure. So the first thing, you and I haven't known each other that long, but our thesis has always been, this is too new of an emerging market to necessarily be betting on the equity investments, because we still don't know, as the industry is emerging, who's going to be the winner and the loser. And unless you're betting on all of them and you have enough to spread around, and then you're not making enough on any one of them, it doesn't really make the investment thesis work. So our strategy has always been to come in at the debt level, make sure that our borrower and our borrower's tenant is able to pay the rent, for leasing that property, so that we de-risked it to even be in the industry. So that's how we felt comfortable. Now, ironically, after we emerged into the industry and lending in the sector, we did pick up some upside, which is very rare that a lender would ever have that. So now we've got not only the debt secured, but with monthly distributions. And theoretically, in 4.2 years with our fund, you would get 100% of your capital back and then be playing with the house's money. That's our strategy. So if you're in the equity markets, I can't speak to what their situation is there, but from this point hearing me forward is that, look, if you're on the equity side, I would try to be in a position where whatever investment you're making is not dependent on legislation changing.
They're enabling access to a set of research that frankly nobody was touching. So while the new market pipeline has been slow, they're all watching cost of capital. Why raise when stock markets are depressed and they're not getting a good valuation out of the company? Smart money cashed up early, like in US cannabis, so there's a parallel there. And they've been waiting out until markets return and retail investor sentiment comes back before they decide they need to tap markets again and continue moving. But being on a senior exchange has meant companies maintain their cash, cashed up early, and we're prepared. And that's something that we're very proud of.
It's a bold move, but a smart move and a needed move, right?
Absolutely. One of our early psychedelics, the first one on the continent, if not in the world, with Mind Medicine. They made it into the same index that Columbia Care is in. They're now dual listed on NASDAQ. They're a terrific example of what it means to be listed, prepare on a senior exchange in Canada, and then take that business on the road to the US.
So your exchange, predominantly known as being a company for a lot of tech companies, psychedelics, even in the crypto space, we're now starting to see a pivot into the cannabis space. And you, like I said, announced a deal with the Chicago Independent Board of, what's the O stand for?
Chicago Board Options Exchange.
That was announced on June 1st, which is a pretty monumental announcement. So walk my viewers through what that announcement means, because as we know in this industry, everybody has that hot question. When are these companies going to be listed on senior exchanges to have access to institutional dollars?
Absolutely. Happy to answer. So from a NEO perspective, we're actually Tier 1 stock exchange in Canada.
Okay.
Tier 1 senior main board, they all mean the same thing.
Okay.
It means more rules, tighter regulations and restrictions for public companies. It means disclosure. For us, we've had that at NEO since day one. And we've been gradually showing the street through examples, and some of the greatest ones we've got are larger MSOs listed on NEO, like Columbia Care, where they've held up to those standards, seen that track and progression occur. And in November this past year, they actually were the first US cannabis MSO to make it into the MSCI Small Cap Canada Index benchmark.
That's impressive.
Why is that significant? It sounds great. You're an index. Everybody wants that. But it really means two things. Institutional investors, which nobody has. And two, it also means that you're getting guaranteed buyers from some of the largest pension plans and institutions in the world. When they invest in Canada, they invest a little bit in Columbia Care.
We had you on, 6 weeks ago, early August. Here we are now in Chicago. You made some comments, talk about safe banking. We're heading into midterms, a little bit closer. You basically said a lot of the contacts and lobbyists that you were speaking to, that you feel strongly that it will pass. update on how you think things are progressing? Is it still like the same sentiment? Like, how are you feeling about all that?
So, there's a recess up until this week.
Yep.
So they're all back now.
Okay.
As a matter of fact, my whole team is in Washington, D.C. as we speak. We're getting fresh feedback every hour. So they're meeting this week with this today and tomorrow with staffers from Booker's office and with Schumer's office. So we should have some more progress. But I want to repeat what I said earlier. I think we're the closest we've ever been to getting safe pass. Safe plus hope is what I think it's going to be. And right now, it's literally the next 2 months are absolutely critical. We're asking everybody to send checks to the USCC, which is our lobby organizations. We're asking investors. We're asking companies. We just had a big meeting with all the CEOs of the MSOs here at the conference. Everybody's pledged to help out. It's not big. We need $25,000, $50,000 checks to try to get this thing over the line.
So when you look, if I'm an investor, it's like, well, here we go. We're hearing this over and over again. Our politicians and lobbyists telling what you want to hear as we head into election. What makes you believe it's different this time than, say, years in the past?
So I think the Democrats have made a mess of this thing. They had every opportunity to get something. This thing polls extremely high. One of the other cannabis lobbies ran an interesting poll. I believe the results are going to be printed tonight. But one of the things I've heard about it is it polled Republicans.
Yeah.
And 70% of Republicans said that they're pro expungements, they're pro cannabis legalization and banking. And what's interesting is 47% of the people polled Republicans said they smoked cannabis, and 7 said that they didn't want to answer. So we feel those that didn't want to answer probably do. So over 50% of the Republicans use cannabis.
Right.
So this is one of the most bipartisan issues in this country, and I don't understand why it hasn't been passed yet.
A lot of the focus, especially the feedback that we received from our last interview, is we talk about Germany, but also just the focus on getting onto major exchanges. What do you think it's going to have to take to get listed on a major exchange within, I don't want to give timelines, but just making it happen?
So the major exchanges in the U.S. have been very clear to all of us that they want language in SAFE that not only gives safe harbor, but says that the U.S. companies can list on these exchanges. They literally want that to say.
Yeah.
We don't believe this particular SAFE Banking Act is going to say that. But what we have heard is that in the conversations we had with TSX, that the TSX is much more open to.
They are.
Yes, because the TSX actually has gone through this process. We worked very closely with them. I can't give the results, but I can say they were very, very positive. Their board looked at it. Everybody looked at it. But once they went to their constituencies, like their auditors, their bankers, their custodians, they turn around and say, guys, but we have nothing to hang this on. We can't do it. Because we have interests in the U.S.
Right. And
those interests are going to be hurt by doing something that's federally legal. So if we get safe banking, and we get in that safe banking, we get a language, and I know we do have that in there, of giving relief specifically in the area of safe harbor to investors, and financial institutions. They can do it.
Can you maybe, and just for viewers that are watching this that are now learning the space more and more, but identify what safe harbor means?
Safe harbor means it's specific to, we're not going to get safe harbor for everyone in this law, but we will get it for banks and financial institutions, which means they can service and work with us without any consequences at a federal level. So it allows them to operate. It's like an indemnity from the federal government. So that's what this is. And what's interesting about the TSX is people might say, okay, but that doesn't give us U.S. But what that does allow is with safe harbor language, almost every investor in the world can actually invest in the sector. And with that, if we're on the TSX, that's an exchange that particularly Canadian pension funds, but as well as the U.S., can work with. It's a major exchange.
Gives you access to institutions, right?
Whereas the CSE just doesn't give us that. That's the problem.
You're a markets guy. So if we look at this, and I'm sure this is a lot of investors' questions right now, if there is no regulatory change come midterms, how do you sort of see this industry unfolding, let's say, over the next 6 months and playing out?
And I don't think there's going to be a regulatory change by midterms. And I think that the good news is everybody knows these numbers. I mean, we've passed in the House 5 or 6 times. We have different conversations going on that I think are probably the more important part of it is there a possibility for some progress between midterms and so lame duck session? Possibly, because.
But far-fetched, you think?
Well, I'm not betting on it. And I don't think investors should be investing based upon looking for a federal headline. As we always say in markets, tell me the headline, and I'm not even sure I can tell you what the markets are going to do. Safe plus, safe with some climate, safe with some there's different components of any of these bills that we've listened to. If you put it into the NDAA, if you put in, there's certain pieces of this that are attachments to larger bills that, yes, this makes sense. There are adults in the room. There are, I think, the right people are having the conversation now for the first time. The posture of Schumer and Booker seems to be a lot more acquiescent and accommodative, but that's not what investors should be investing in. And I think investors...
We've had those conversations today about how people need to kind of reset their expectations, right?
And I think they have. And I think, one thing I'll just, we'll just say, because I think at some point, if you think about where markets are right now in cannabis, you can't invest in a bad neighborhood, and just like you don't want to buy the best house in a bad neighborhood, you probably want to buy the worst house in a great neighborhood. What is the global capital markets and markets environment right now, where outside of cannabis? Look, today, on the day this conference is being held, S&P was down 4.5%, NASDAQ was down 5.5%. There's a re-rating of asset classes everywhere right now. And right now, even though cannabis has, on some level over the last 18 months, probably gone through, I think, done a lot of its heaviest moves lower, I think it's going to be impossible for cannabis markets to rally in the construct of global markets that are hemorrhaging. I just do.
So let's look at where we are today. We're like, what, T-minus 60 days to midterms.
Yep.
A lot of conversation that continues to take place, especially the hot topic, safe banking. Whether or not that passes or not, you run an ETF, as you said off the top. What's your strategy when it comes into playing in this industry right now? How are you investing? Are you investing within the space?
Curaleaf's the biggest position in my ETF.
It is.
Okay. And look, to be clear, the top 5 U.S. multi-states are the top 5 positions in my fund. I have a decent sized position in Tilray, because I think Tilray 2.0, which is really Afria plus Tilray, has some interesting dynamics that actually...
What interests you when you say...
I think the size of that business in Europe is something that's interesting. I think they, at least, along with Curaleaf, have the most optionality to Europe, and I think Germany is at least closer than we think.
Do you have conversations with people in the German market?
A little bit, yeah. I mean, my sense is that from an operator's perspective, those are really the folks that I'm talking to, and those are the folks that are seeing both the evolution of where the legislative process is going, but truly the adoption and what's going on in the medical market, which is highly fragmented and highly profitable for at least the guys that are doing it. But the ability to consolidate and be first mover, I think that's something that's worth having exposure to if you're an investor.
Hey everyone, thanks for watching. And if you like this video, wait until you see what we have next. Some of the best thought leaders in the verticals that we cover, from cannabis and psychedelics to cryptos and NFTs and sports wagering. So if you want to learn more, make sure to click on that bell for all notifications, and don't forget to subscribe to our channel. Thanks for watching.